Hello and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is October 26th, 2025, and we are taking a deep dive into USDCAD, the US dollar versus the Canadian dollar. This pair is at a fascinating juncture, consolidating around the key psychological level of 1.4000 after a strong multi-month rally. In this video, we'll first cover the crucial news and fundamental drivers shaping the market, and then we'll jump into the charts to identify key levels, trends, and potential trade setups. Let's get started. First, let's talk about the news, because the fundamental picture is setting a very clear stage. The dominant theme is the divergence in monetary policy between the U.S. Federal Reserve and the Bank of Canada. Reports indicate the Bank of Canada is leaning dovish, with a high probability of further rate cuts to support its economy, especially given the recent uptick in the Canadian unemployment rate. Conversely, while the Fed is also expected to ease, the Bank of Canada is anticipated to cut rates at a much faster pace. This policy divergence inherently favors a stronger US dollar against the Canadian dollar, providing a strong tailwind for USDCAD. Adding to this, weakening crude oil prices are a significant headwind for the commodity-linked Canadian dollar, further supporting a bullish case for the pair. Political uncertainty is also a factor, with Donald Trump's return to the White House introducing potential tariff discussions and Canada itself facing a weakened minority government after recent political turmoil. This kind of uncertainty typically drives safe haven flows into the US dollar. The most immediate catalysts are the inflation reports. The US CPI data was released on Friday, and the market is now eagerly awaiting the Canadian CPI report, which is a major risk event for the week ahead. A weaker-than-expected Canadian CPI number would almost certainly cement a rate cut from the Bank of Canada and could send USDCAD sharply higher. Conversely, a surprise jump in Canadian inflation is one of the few things that could provide the CD with some strength and trigger a pullback. Now, let's see how this fundamental story is reflected in the price action on the charts. Looking at the daily chart, the long-term trend is undeniably bullish. Since the bottom formed around the 1.33 level in September 2024, the pair has been in a powerful uptrend, carving out a clear series of higher highs and higher lows. After reaching a peak near 1.45 back in February, we've seen a healthy pullback and a period of consolidation. The price is currently holding above a very significant area of support around the 1.4000 handle. This level has been tested multiple times over the past couple of weeks and has held firm, suggesting strong buyer interest at this price. The recent price action shows a pullback from highs around 1.4060 down to this support zone, where it now appears to be building a base. From a structural perspective, the key support to watch is the zone between 1.3970 and 1.4018. As long as the price remains above this area on a daily closing basis, the bullish bias remains firmly intact. A break below this level could open the door for a deeper correction, with the next major support area not appearing until the ascending trendline near 1.3850. On the upside, the first level of resistance is the recent swing high around 1.4070. A decisive break above that level would signal a continuation of the primary uptrend. Beyond that, traders will be looking at targets of 1.4150 and 1.4200, with the ultimate long-term resistance being the 2025 highs near the 1.4400 to 1.4500 region. Now, let's switch to the 15-minute chart to get a closer look at the very recent price action from this past week. Here we can see the battle around the 1.4000 level in more detail. Notice how the price dipped below 1.4000 on October 22nd and 23rd, but quickly found buyers, failing to sustain any significant downward momentum. The price action on Friday, October 24th, showed a slight upward drift, closing the week near 1.3994. This tight consolidation is classic price action for a market that is waiting on a high-impact news event, which in this case is the upcoming Canadian CPI data. The market is coiling, building up energy for its next move. On this short-term timeframe, Buyers are looking to defend the lows around 1.3970 to 1.3980. A break above the recent consolidation high of roughly 1.4040 would be the first sign of bullish strength. Sellers, on the other hand, are looking for a failure to hold this support zone. A sustained break below 1.3970 on the intraday charts would signal that the bears are gaining control in the short term, likely triggering a move down to test lower levels. The low volume over the past few sessions confirms this period of indecision before the next major catalyst. So, let's bring it all together and recap the key takeaways. The fundamental picture, driven by monetary policy divergence and weak oil prices, is strongly bullish for USDCAD. The long-term technical trend on the daily chart is also clearly bullish. However, the pair is currently in a short-term consolidation, awaiting the Canadian CPI data for its next directional cue. Let's go back to the daily chart to summarize the critical levels. Here are the most important price levels to watch. Major support is the 1.3970 to 1.4000 zone. A break below this would be the first bearish signal, targeting 1.3850. Immediate resistance is at 1.4070. A break above this level confirms the bullish trend continuation, with initial targets at 1.4150 and 1.4200. The primary objective for bulls remains the multi-year resistance area around 1.4400. Here are my unbiased predictions. The bullish scenario seems the most probable, with about a 70% likelihood, given the strong fundamental alignment. If the Canadian CPI comes in at or below expectations, we should see a breakout above 1.4070 relatively quickly. The bearish scenario, which I'd place at a 30% probability, would require a significantly hotter than expected Canadian CPI report. This would force the market to rethink the Bank of Canada's path and could drive the pair below 1.3970 for a deeper correction. The key thing to look for is the market's reaction to that inflation data when it's released. That will set the tone for the coming weeks. That's all for today's analysis on USDCAD. Thank you for joining us here at Explain the Charts. If you found this video helpful, please hit the like button, subscribe to the channel, and ring the bell so you don't miss our future updates. As always, please remember that this video is for informational and educational purposes only and should not be considered financial advice. You should always conduct your own research and analysis before making any investment decisions. Trade safe, and we'll see you in the next video.